Hey everyone, this is Professor with Day Trading for Success. Stick around, I've got an exciting video to show you about how we're doing in our challenge this month. I'll be right back.
Welcome to Day Trading for Success, where the professor, a former math teacher turned full-time trader and coder, guides beginners on how to trade for a living using proven strategies, breakthrough indicators, and lessons from essential trading books. The professor isn't a licensed financial advisor. Always consult a pro before diving into any strategies or demos you see here. Start smart, practice in a simulator, stick to a solid day trading plan, and don't forget to log every trade. Your profits will start with preparation. Thank you for allowing us to share in your journey. Please remember to subscribe, comment, give a thumbs up, and click that notification bell so you can be the first to receive more of our great content.
So welcome back, everybody. This is the professor again with Day Trading for Success. So I've got open here Trader View. This is where I report to from Charles Schwab and Thinkorswim. Every day, every morning, we bring back over the trades that we traded, and I'll show you on the actual platform as well. So right now, we're just showing how to scalp. I trade live every single morning. You can come over and trade along with me. There is no membership fee. There's nothing. I don't ask for your email, nothing. Just come over and watch and root for me, and hopefully root for yourself. Obviously, I'm not a licensed financial advisor, so you should seek the advice of someone licensed before you try to emulate me. Trading is risky, so be careful. Trade in a simulator, and only with money you can afford to lose. Anyway, today, this month, we started out wanting to make probably $150 a day. We had some of the staff trading with us. I'm trading in the studio here, and today was a pretty good day. We did over 300, as you can see here. Labor Day was off, so we have 7 days of trading so far, and we're averaging $207 a day. So about $50 more than what is my minimum that I go for each day. So it looks like this is going to be over $1,000 this week. So if you just compute that, if you're trading 20 days and you're making $200 a day, you're making $4,000 a month towards your expenses with only trading about an hour a day on a very, very conservative trading. It's very, unless you just don't get out, you don't pay attention to your max loss, and I put out rules all the time on what to do. You should make your own, but this is basically how I trade. Now, this comes from a swing trading mentality. All right, but following these steps, the one that is outside the norm of what you would normally hear is that you would add to your position. And I learned that from swing trading way back when, where you're waiting to get in at a certain dip, and sometimes it looks like it's not going to get there, so you're like, well, I'm going to get in some of my position in now above the dip, and then I'll scale in the full position as it hits it, and then I have a max loss down there if it keeps going against me. But for the most part, you're getting your max position in that case would be the floor, like where you intended to enter all the shares at once, but you're afraid it might turn around and go the other way, assuming you're trading long here. And that's why swing traders will scale into the position. They'll also scale out as they go out. In this case, the way that I scalp, which is a little bit different, I put far much risk in my scalping. I only go in 25% of my position. In 80 to 85% of my trades never even exceed that. They just stay there, and then I get out real quick and make some money. Some money is better than no money. I'm not going for big money. Scalping, you're in and out. It's the fastest way to day trade. You're in and out in just a few seconds, maybe a minute. You could get stuck and you wait, but I just get in and out. I don't get greedy. $10, $20 a trade, and then you trade 10, 20 times, and you've got a lot of money in less than an hour, and you've never really risked too much to do that. Not saying that I haven't lost trades. I certainly do, but my average runs, I think this month it's a little bit below 90. We'll go over that in a minute, 90%, which if you talk to most scalpers, that's unheard of, that type of accuracy. It's not me, though. What it is that basically following support and resistance historical data, and then watching the price flow by using indicators to do that. That's how I trade. You might want to trade differently. But back to this, if the price is going against it, like you get in and it's going down instead of up, if you're going long, right, and it keeps going down, you don't want to just add to your position so you get a better price point. No, absolutely not. That would be the wrong way to do it. But if it's going down and then it shows signs that it's going to reverse back to your position or even maybe further. It's gone down and now it's going back up, right, on your chart. When you see definitively that it's going up, if there's such a thing, right? It's just probabilities, guys. That's all we have here is what's the probability here. But then you add as it goes up and you've made a better price. You're not getting the best price because you didn't get it at the bottom. You waited for it to turn around and show signs of full recovery. Then it's like, hey, why not go in for a higher share size? You can get out quicker or you can make more money. But all these other things are really things that any trader should follow, log every day. If your hands are shaking, you need to lower your share size. If you're sweating, if you're nervous, if you can't hold into the move that you predicted, because you're making a day trading plan, remember. And if you can't, every trade is its own mini plan. You should see like, here's where I want to get in, here's where I want to get out, here's my maximum loss. So you have lots and lots of videos on that. But if you can't wait for that, that means your share size is too high. That means you're too afraid and that you can't trade if you're trading completely out of fear, right? You want to trade out of confidence. So anyway, you should make your own rules to follow, but this is, other than the add to your position, these are pretty good rules for anybody to follow going along. And I'll just flash this up while I'm here. Remember, I am not a licensed financial advisor, guys, so please read that and be careful with real money. A lot of people just go in with one share size, just one share size until they get, or they trade in the simulator, right? Today we had a pretty good mover, and let me go into the monitor here. So here's the stocks that I traded today: CoreWeave, Hood, Robin Hood, and then Oracle, right? I came back on after the stream and did a few more bucks on Oracle. Got us up to I think it was at 218 when I stopped. This was just a couple of trades more, and I got it up here. So that worked out pretty well there. Let me go back to let me see if I can, I think I clicked off before I showed the accuracy. So let me get this tab reopened over here. And we can get into the accuracy of, because I never looked at that. So here was the month we were open right there. And then now let me go into the report so you can see how I've traded for this month. So here's my accuracy trade. So only 80% today, 92% yesterday, 76% back there, 90% there, 73% there, 80% here, and 90. So if I did a quick assessment here, I'm only running at about 82 to 84% on an average over those days. So that's down for me. Normally I'm higher. I have been getting out more often than I normally would so that it's easier for people to follow around with me, like take the losses much lower than I normally would, or I would hold into them and might make them a swing trade, or I would add more to my position. What I've done here is I've opened an account that is the size that everybody should be able to trade if they've made the PDT rule, and I never go higher than that 4 times margin. So anybody who's trading this way, who's scalping and can do as many scalps as they want in a day, should be able to follow along with this. Again, I don't recommend that you follow along. I recommend you follow along to learn, but not adopt every single of my trades. You need to really see it for yourself and go in and go out. I know most people don't, though. They just follow along exactly. Remember, there is a delay on the stream, so remember, that's why I try to call out the levels I'm looking at, because I know what you're going to do, but I cannot take responsibility for your trades. I am wrong. But often, so you have to, I can't take on the responsibility of you and me, and I really worry about you. I want you guys to make money, so that to me, it's more important than making a few bucks, as most of you know that follow along. I am a large share size trader. I trade thousands of shares with other groups. So doing it on a smaller account like this, it may seem big to you to trade 50 shares or 100 shares, but really that's pretty standard as you start to feel that your confidence and, adding $2,000, $4,000, $6,000, $8,000 a month is not that hard to do. Once you get into it, it's just not that hard to trade with that kind of accuracy. we can kind of look back. Let me go to say, I think some of these still have my original, yeah, these still have the original levels. Let's take a look at Robinhood that I traded this morning. I think I just took one trade, maybe two trades. I set the breakout levels here. That's what that is, based on Day Trading Volume 4, which is the book that has you trade the open with 4 different breakouts. And what I mean by that, a lot of traders will wait for the candlesticks to form at the end of the first 5 minutes. You'll have a 5-minute candlestick high and low, and if it breaks out the high or breaks out the low, then you normally would jump in that direction, short or long. Not, you want to look at other things, but that's a breakout level. Like, hey, it's breaking out, get in, go for it. And they do it for the 15-minute as well. So the book covers 4 of the main breakout levels. So I recommend you get that book. I have a link to it. But most of the historical data is based on Day Trading Volume 1 or the theories behind, trading in the zone or best loser wins. I mean, I have links to all those books. If you're interested, it helps me out if you buy them through my links, but just get them wherever you get them and read them, and it will help you become a better trader. I like the $1 Million Margin Club books because they have strategies, and then they also have that Day Trading Volume 2, the Candlestick Pattern Playbook, which is the only book that rates the accuracy of the patterns. So you have a couple different things to think about, and I talk about this a lot. You have the overall patterns, right, and you go back multiple days to see those, right? The overall patterns, what's happening here. And if you were to mark historical data, there's an example of historical data. Where did the stock come up and abruptly turn around, right? Right there, right? That level. This was the close of a different day, so this is kind of not helpful at all. And then here, this was an intraday level that I set, right? But this might be a level that you would smooth out and mark. See how many times it stopped there and turned around right here? Right at the end of yesterday's session. The black are the open sessions. These are the post-market and pre-market. Not as many people trade in these. You have to have the right brokerage to be able to do that. But you can see this historical data as it went across from this day. The pre-market, it held it nice and firm. It looks like it did a bunch here. It gravitated around that level. Why would it do that? Well, that's a pattern, guys. Patterns repeat. Right? That's why they're called patterns. So you're looking for something to repeat. So you'd want to make a note of it. So there's that kind of patterns. And the other kind of patterns that I was just talking about with Day Trading Volume 2, the Candlestick Pattern Playbook, were the patterns within, that the candlesticks make themselves. There's all kinds of patterns right here, and when you learn them, they're very, very helpful. This is a tweezer move right here, so that's where they line up and go down, showing the rejections about to happen. This is a doji or a rickshaw man. I'm just trying to pull some of the ones I see. But there's all these different books that whatever book you get. See, this is what I would do for intraday historical data. I would mark that level right there because it tapped here twice, turned around abruptly, came down, tapped, turned around. Then it finally did a breakthrough, and now you look at it like, well, is it going to reject or is it going to come back through again? And this is creating a channel between the older historical data and new historical data. I know I went off topic there. But yeah, the pattern books are very, very helpful. To one more way to tell you what direction the stock may go. You may be a winner. There's nothing's going to tell you exactly right. But the more things you line up, the better chance you have. So if somebody says, when it gets here, do this, then turn the channel. Don't listen to them. Because nobody really knows, and it's not that kind of pattern repeating, right? If it gets there, maybe do that. If he says that, and then look for or she says that, and then look for other reasons why to maybe do that, then that's cool. I'd listen to that person. But there's no always, no definite, no. Just remember that. And usually when you get people that are so definite that aren't like questioning themselves, they're selling something to you. They're selling a strategy, or they're selling you to get on their channel and buy their course, and they need to sound really, really confident. And they start to say, let me show you how much money I've made, and which is a weird concept in yourself. People are showing how much money they make for marketing purpose. They're marketing something to you. Look how good I am, So I just did that. In fairness, I just did that with my trader view, to try to get you to come over to trade along for free with me, for free. I'm not charging. So that maybe, just maybe, you can be one of the 5% that makes money, doing this. Another way that you can do this to things that you mark is you mark trend lines, right? So let's add a button. Let's do a trend line. So now I put it up here on my tool, right? So I click on this. If you're going to make a trend line, you'd go down to a low and, get close to it, and then you click it. And now you're dragging this trend line along, and you're looking for where did it respect it again. Well, it came down and hit it there, but that was pre-market. Open session, it hit it there, but now you start to look to yourself like, look how far away that is going to be from any of this price down here. So kind of useless unless you're in a long-term thing. Then you're getting into day trading. You're like, wow, look how it hit there, and then it rejected off that level. So this, you wouldn't have known that, right? Let's say you marked it before the day opened. So now you have something that was fairly well respected here, right? So that's not a bad level to have marked. And if we got into the intraday here, what would that have looked like? Well, it hit it a bunch of times and rejected. Then it hit it and came back up. So when you combine the trend with historical data, with candlestick, when this is historical data too, but with support and resistance, horizontal lines, and then candlestick patterns, and then indicators that help you see which way it goes, and then price flow, right? I'm going to overwhelm you. But the more things that you line up, and I go through this on almost every trade in every video in some form or another, the more you line up, the better. Trading with the crowd. See these little gray lines? That's every half and whole dollar. People instinctively get in at half and whole dollars. So that means that huge momentum of people jumping in or out helps you determine the direction of the stock. So you're going to just try to go in for like a 7-cent move or an 11-cent move. This is showing you the average of the last 9 candles. It's basically telling you what to go for. 100 shares, 7 cents, $7, right? $10 if you only go for just a little bit below at 10 cents, say, right? You do 200 shares, double that. You do more trades. I think this was 2 trades, maybe 3. I just stair-stepped up, and I did all my trades today in less than I think it was about an hour and 10 minutes when I came back to assess and trade again. Hour and 10 minutes, $307, whatever it was. So you can't expect to make it all the time. I would set my goal much lower, $25 a day, $50 a day, and then gradually work up. First, I'd trade in a simulator. But I mean, the more things you get to line up to trade with the crowd. I have moving averages here. So what are these little snakes going across the screen? That green line is showing you the 20 moving average. It registers the last 20 candles, and then it averages out, smooths out like this is where they'd end up if you averaged out the price movement of the last 20 candles, right where that ended. This gray line's the last 9 candles, right? Sometimes I'll have a 14 on here, or I'll have large day ones on here, which are going to probably confuse you. So I won't even go find them. But so that's going to help tell you too. And then you have indicators that when those cross over, they register with an arrow and they tell you, hey, this is about to go down. It's so simple, right? You don't even have to know what it means. It just says, go down. Okay, go down. So sometimes having the prop firm indicators that they train their traders with is a really good thing to have. So I would look for those and get those. And really, if you go to buy them, anything over like 25 or $50 at the very most, you're getting totally ripped off if you're paying hundreds of dollars for an indicator. On Thinkorswim, at the $1 Million Margin Club, they're all like $24.99, and the custom scanners are like $4.99. So, look around a little bit. You can get free ones too. You can find free ones. I have a lot of free ones on this channel, but the choice ones, the real, up-to-date good ones are at the $1 Million Margin Club, and other ones too, but I haven't seen anybody cheaper than the $1 Million Margin Club. So with all that data, it just becomes a no-brainer. Down here, the Scalp Pro meter, this is telling you what's happening inside the candlesticks. Let me open this up. This blue column is this candle representing this candlestick's volume, and this says how many buyers are in green and how many sellers in red, and this meter shows you how strong they are, and here's the percentage inside, and then this turns blue rather than white when the volume increases the volume of the last candle, letting you know, hey, there's a trend here. It's stronger, or at least a short, very, very short-term trend of strength, right? So I don't know if this will turn fast enough to, yeah, it's going to turn. Watch this turn blue. So this is going down, and it's telling you, it's about to tell you that it's a trend down, see? And the MACD said go down too. So basically, this trade right now said go short. Let's see if it actually goes short. This is hood, meaning going down. So it set it right here at 72, and it's already down to 69, 67. I mean, it's stalling. It's pretty slow. So you could have gone out already, but there it goes. Yeah, just like it said it would happen. So that would have been an easy $10 to $15 trade, depending on your share side. And you just take the money and run. Don't get greedy, right? Unless you really know through all your technical analysis, I believe the stock's going to go down to 117.50 right here. So I'm going to hold to there because of my due diligence and data. I'm not going to jump out like I'm scared. I'm going to hold it. But if you're not sure of that, which most traders aren't, taking those short-term scalps are better. If you want to trade longer for bigger moves, then move over to a 5-minute chart. This is just 1 minute. Every one of these represents a single minute. And I see people trade on 10-second charts. So once you start trading on a 1-minute chart, all the other charts seem so slow. It's like watching paint dry. It's just, come on, man. Make a move, man. I get that way. You'll listen to me whine a little bit like, come on, when I'm trading. But I have a lot of patience learned through life because I'm older. So sitting on the park bench, trading 1-minute candles before I start my shuffleboard game. No, it's not that bad. But I'm just saying you can learn patience, and it's a good idea. Because trading is boring, and you want to be able to sit and wait for even these 1-minute moves to go in your direction. This is still living off the data we got. Is still pushing down. You could have made this trade several times, in and out, in and out, in and out, So that's just a little bit about technical analysis and different indicators. If you open the day chart down here, you can see, I even watched the social sentiment here. This indicator is actually free over at the $1 Million Margin Club. You should go grab that one. It's telling you that there's a minimum of 100,000 volume in every 1-minute candle. It's telling you right there over a 10-day average and then over a 1-day average, right? This is another one telling your average true range split in half in the full thing. Here's the daily moving averages. I remember I pointed out the 9 and the 20. That's the 50, the 100, and the 200. When those cross over, that these are things to think about, how to foul that trade. Like when that crossed over the 100 right there, that told you on a longer term trade, go long. Look at just how it just went straight up, right? So this really gave you like 3 weeks worth of trade upward by just following that one thing. It's even stronger when it crosses the 200. And then when it crosses back, be careful. See how it's crossing back down? It's like losing confidence. And then it broke back up again. There's an entire book. All it teaches is that particular move for long-term trade. So I recommend you look around and study. And if long-term swing trades are the way to go, those are, books that cover that kind of stuff is better. But if it's a book that's selling you a course, take it with a grain of salt. If it's a book that they're just passing on their wisdom, those are the books you want to go for. And there's a lot of good ones out there. And I've linked at least 3 really good ones for you that aren't selling courses or anything. So look at those, because that's how I started. 2 of those books, well, I wouldn't say it's how I started, but I added them very, very quickly to my trading, and it helped me immensely. Those books. So check those out. Check out the indicators, but just come around, stop by, and trade for free. If you subscribe to the channel, you'll get an alert, or just remember to check. If you don't want to subscribe, just remember to check every morning. We're kind of doing a revamping where we're switching to small share size live trade rather than large share size. So a lot of people have jumped ship because they only want to trade large share size. And I do that on Zoom, but I don't do that on streaming. And these are all people that are registered to trade large share size with the SEC. Just because of the amount of money that it is. So maybe one day you can be one of those people, but you need to start small. People were trying that, and some people were getting hurt. So learn how to scalp with me, guys, or with other people. Learn how to bring in $50, $100 a day, $200 a day. How much, if you're retired right now, how much? I definitely sound like a commercial. Get a reverse mortgage. No, but if you're retired and you and your wife are bringing in between $3,500 to $5,500 a month, but you really need like $8,000 or $10,000 to make your nut, right? And you have money saved, but it's slowly dwindling away, like so many people, because you're making the difference between your Social Security or whatever other funds you might have. You're kind of, it's drawing on your account. You're not making enough on your investments to pay your monthly nut. There is a lot of people like that, a lot of people that didn't plan well, or the plan didn't go the way they wanted, or it's not their fault in any way, shape, or form. That's not what I'm saying. And they need to augment their income. A lot of people, more people are that way from who I've talked to out there. I mean, I was a former math teacher, but also been, I'm a trader and I quarterback, so I've been mentoring and training traders for many years, and I've come across a lot. I don't do that now, so don't email me, ask me that, but I do quarterbacking still, but for large groups. So I know for a fact that there's a lot of people that just need 2,000, 3,000, 5,000 more a month. And the $1 Million Margin Club put together this support and resistance strategy with Fibonacci levels to help you. Since I've showed you this much, let me just, in case it's the only video you watch, let me go to the Fibonacci levels, okay, guys? All right, so the base of a strategy is, let me go to something like Apple here. Let me go to Apple. Is Apple up here? No, that was one that came up on the scanner. Let me look for Apple right here. Okay, this is marked up to the nines. I'm going to get rid of all these for you because my life is drawing lines. It's all I do every day. So those of you that already know fibs, you'll now turn off the video. But if you don't know, so this way of marking Fibonacci levels that I'm about to show you for support and resistance is not the same way a lot of people will show you how to read the different percentages on your Fibonacci levels, which people talk about as being nature's mathematical formula because of how it's repeated in everything that grows around us on our planet, So a lot of people follow the Fibonacci formula all the way back from, it's about as old as you get, nature's mathematical formula. So professional traders put together that if you go to a 5-minute chart and you're just looking for support and resistance, this one's set for 10 days back, a 5-minute chart set for 10 days back, okay? Now I'm going to look for the high and the low, and the high could be up here and the low could be down here, or the low could be down here and the high could be up here. It doesn't matter, but you always mark it left to right. That's the one thing to remember. So I'm looking for the low now. It's right there. I'm going to pull it right to the edge. I happen to have this up on my tool bar already, but it's called the Fibonacci retracements. So I'm going to click on the low down here. So that's 69. So 224.69. I'm looking off to the right to see the price. There it is. Now I've got to wheel over here, a little out of position here because they're so far apart, and get to the high. And the high we saw right over here. So there it is. So that's 241.37. So a couple pennies down from right there. It's very sensitive to get to the exact. There it is. Now that is Fibonacci levels that just opened up from its formula. Look at how the price action, every candlestick, right, represents the price going up and down in a certain time increment. These are 5-minute candlesticks, and I can zoom in on it, but I just wanted to show you the broader picture of how it bounced back and forth, how you could have taken a long trade, then taken a trade and gone down, right? And then, here you're kind of in the doldrums. But if you just played that the day, like maybe 2 trades, you have an amazing channel here. Happened again, channel here, then it channel hopped, channel here. It's not exactly, right? They're not exactly. Let's look what happened on today's action from way back when. It kind of stopped in this channel down here. This is just the beginning of the strategy. Now then, look at how it respected it there. From way back there, I marked it. Look at that. Came to a complete stop and told you, go the other way. It's not going to tell you every time. So how did they make it even better? Well, then they do a 5-minute 2-day. Okay? Now you're going to mark more of these, but much closer time frame, right? This should just be on 2 days. It seems like it's going back further. Oh, wait a minute. I can't mark today's action. So let's pretend we don't know that today happened. Did I mark today's action on this? I don't think so, right? No. All right. So we're going to go high to low, which would be, so it would be like we'd mark here. Because I'm pretending that we marked this before the day started. So otherwise it's kind of cheating to go down to where the price actually went to. 72, there it is. Okay, so now I'm going to scan over here to where a low would be, which I think is right here. Yeah. Does it go any lower? Oh, no, it goes lower. So let's say I marked it on the pre-market, so we get a little bit different readings here. So right there. I'll make that a different color so we know this is only the 2-day. Often I'll only do the open session. Now the gray are post-market and aftermarket and pre-market. This is the open session where most people trade, right? So now, as you can see, I'm not editing, I'm just riffing here. So let's just see what happened here. Yeah, because the 2 days are way up here, this price action would have helped us up here, but it doesn't help us down here because this Apple dropped way down today for some reason. So normally when you're trading this strategy, if it makes a big move that's trending, you don't want to try to trade it because you're looking for a consolidating one. I thought I was going to be at a consolidating stock, but apparently not. Let me just open the 10-day to see if we have any historical data here. Hang on. Did I not go to the 10-day? I went to the 2-day again. Hang on. Here's the 10-day. Okay. All right. Let me go back here. So we're way over here. So so we do have some historical data that is in the same price range. So it's over here. So what else is historical data besides Fibonacci levels? I think I mentioned it earlier. Where has the stock stopped and abruptly turned around? And then has it stopped in multiple places as you go across to try to smooth a level that is catching more areas where it might respect? So I would mark that level, and we definitely want to mark this. Now we're down here because we know that price action is in this area already. So I'm just marking these to see. Normally we do something like that, right? Because it catches all these. Like that's an amazing level, probably. You don't know. But that's all historical data is where it stopped and abruptly turned around. So you can see as we got into this day, I would have gone back and checked these levels to see how well I could respect those. Look at that, guys. Look at that. I go short, boom, boom, boom. It gets close, it rejects. I go long, gets up. I go short, boom, boom, boom. I go long, it rejects. I go short probably, and I have a losing trade, but then it comes back and it makes it a winning trade. I go long. This is channel trading, ceilings and floors, a strategy put together in the original book, Day Trading Volume 1, still used today all over, and it is really the safest strategy to trade. So that's Day Trading Volume 1. This is called the RV strategy, and it's really, you need to try it because most people just stop right here and make money. But as the trading goes on in the middle of the day, you can do what we call intraday levels. Like if this kept respecting this area right here, right here, that's so abrupt. I would mark that in case it came back. You can see it topped out here, and then it did it again here. So if the price action was coming back today, I would make note that that's something to watch. That's all you do. You can't count on it. You can't count on it. But maybe it will do what that just did. So maybe you have something that gives you a little bit of an edge when you're using other indicators like I went over before. And I'm not going to go over every indicator here, guys, because there's a ton of them. But believe me when I tell you, prop firms use them for a reason. Prop firms train their traders with them for a reason. And they do help once you learn, but it's a little bit of an education. You can see it's messing around on, this is the 1 minute chart. That's the 5 minute chart. So it's messing around at this level, telling you like, you might want to go long when it hits here. It turns you around with this risk oscillator, turns you around here too. It's like, hey, go long. And then you already had a move right here. It wasn't a big move because Apple's a slow stock, and then here it just kept bounding. It broke it for a breakout, a flat bottom breakout, they might call it. And then it's and then finally broke up. And you're like, holy crap, that's a move. And then you get ready to get out because you have more historical data right here. It's like, uh-oh, get ready. And then boom, 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 boom. Look at that. Look how much money you could have made there. And all I did is I simply marked out the levels. People tend to overcomplicate this. That's all you have to do is mark out the levels, be discerning, be conservative, keep your share size small, and don't overstay your welcome. Just put green in the bank, put money in the bank. A green trade adds up to big green trades, to pouring money on top of you. Just take the baby moves and don't try to get rich quick in one day. You see these guys make $100,000 a day. I've seen guys make $200,000 in a day, right here in this studio. And not just a day, like in an hour, so it can get you really excited, but it's a lot of years of experience, and it's not as easy as it might seem. So you want to just build up your money ever so slowly. Okay, that was my words of wisdom, guys. So that I'm not showing you the whole recap today, so please go to the live stream and you can see the trades that I took, that I gave you the total on. And thanks for tuning in on this video, and follow us for the rest of the month. Come on in and trade, or just watch it being traded. It's not a waste of your time. You might really pick up on something that could be helpful for you. Okay, guys, I'll hopefully see you in the morning. All right, go green out there.